And Nick, we were talking to a payments company here yesterday, and one of the big things that jumped out as to why the banks have not been playing in this space is it's just too heavy in terms of compliance, signing some of these merchants on for online payments, conducting all the right checks. So it is a race to try and sign up some of these merchants. What does that mean in terms of your business? How much speed do you need to apply to connect up these merchants? And how sticky do you think the customer base will be over the longer term?
That's a great question. So I don't know how the other payment company position themselves, but we consider ourselves to be the best partner for the banks. We actually have the dedicated business people to establish and maintain the relationship with FIs, financial institutions, mostly with banks. On the first hand, if we look at historically, banks were born, the modern banks were born with trade. And they are challenged in many ways because their system probably is a little bit slower to adapt. At the same time, they focus on servicing larger merchants rather than smaller one. But at the same time, the opportunity in front of us is immense, and we really believe, we as a payment company, we actually bring both efficiency and better customer service experience for them. I think for the banks, for the smarter banks, they realize that already. So we pay the banks a lot of fees at the same time, use their rails to piece together a customized channels, customized network for our customers worldwide. So it's very symbiotic, and I can only see the relationship develop. And I think for the smarter banks, they're going to embrace the trend.
We've just been through a crisis in many parts of the world. Some are still going through it, but default levels have been much lower than in previous crises, thanks to all the support from central banks, not allowing too many businesses to fail. What does that mean down the track, though, as you onboard some of these merchants? Is there a risk that when the next crisis hits or when we see credit conditions tighten, that there might be concerns around some of these particular merchants?
Coming from the technology sector, I'm forever optimistic. I think some of the challenges that during the prior crisis is when the banks they had higher liquidity. When they tried to put the money into loans, they were slow to react to the condition, probably assessing the risk. But technology exactly is there to solve that. So for example, we have a thriving financing practice within us that's tied to the data that we observe on a daily basis of our merchants' trade flow. And we provide on a seasonal and short-term basis at very, very reasonable rate. And our banks, again, is a liquidity provider. We're only the channel for that. So to answer your question directly, I do think, both the banks and the payment providers, as well as the merchants, they're going to enjoy better flexibility and better agility and lower risk if there is any challenge when the liquidity dries up a little bit.